Welcome everybody to the Texas REIAs. The Texas REIAs is the largest by far network of real estate investor associations in the great state of Texas. 150,000 members, participants, and attendees going back to 2003. The Texas REIAs provides resources for Texas real estate investors. They say if you have the slightest interest in real estate, I assume if you're listening to me, you have the slightest interest in real estate, the first thing to do is join your local real estate investor association. Thousands of buyers, sellers, vendors, private money lenders, and more. And we provide a lot of resources for Texas real estate investors, including market data. So I'm going to share very quickly some market data with you. And I'll give you a quick market update. So what's going on in the marketplace? Well, this is what I call the Texas Roundup. The average price house in the state of Texas is $436,000. It is up 1% from 1 year ago, basically flat. The median price in Texas, $340,000. It is down 1.5%, basically flat. But if you want to look at one number, and you want to just look at one number and say, what's going on? What is the one number that kind of tells me more than any other number what's going on? It's this number right here, months of inventory. What is months of inventory? Let me show you how that's calculated. If you took all the houses for sale on the MLS and you said, we're not adding any more, you're not allowed to put any more houses for sale. We're going to just take the houses for sale and we're going to sell them until they're out, until the shelves are empty. How long would that number of houses last? And the answer is 5.8 months. And that's also the average amount of time to sell one house. Now that's average. Some sell much faster, some takes much longer. That's why they call it the average, 5.8 months. Now let me put that into perspective for you. They say if there's less than 6 months of inventory, you are in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. Technically, what market are we in? Seller's market. Less than 6 months. People think it's a buyer's market. We're technically still in a seller's market. Now, not much of a seller's market, virtually a neutral market. Now, a year ago, we had 4.7 months of inventory, which was a pretty good seller's market. Now we're in a just barely seller's market, but it's still actually a seller's market. Why is that? Well, what's the biggest thing that changed over the last few years? Interest rates. What happened? They went up, right? And when interest rates go up, what happens to home prices? They go up or down? Kinda. So real estate doesn't really care about interest rates, interestingly enough. Real estate cares about two things, supply and demand. That's it, supply and demand. It's the most pure supply and demand market there is. Now, for sure, when interest rates go up, right, the interest rates go up, the payments go up, right? And so the payments are more expensive, so fewer people can afford them, which means the demand goes down. And when demand goes down, yep, that pushes prices down. But there's an offset. What's the offset? Normally, 2/3 of the houses sold on the MLS are resale houses, and 1/3 are new construction. That's the normal mix. Right now, it's inverted. 2/3 of the houses selling are new construction, only 1/3 are resale. How come people aren't selling their house? They got a 3% interest mortgage and they don't want to give it up. People should be selling their house. The economy is pretty good time to buy. People should say, honey, let's sell our house and buy a new, bigger, nicer house. But they're not. They're staying put because they got a 3% mortgage. They don't want to give it up. Interesting. Something else that's interesting, right? So there's not enough supply. And when there's less supply, what does that do to home prices? Pushes them up. So we got things pushing down, we got things pushing up. We got another thing going on in Texas. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Pretty obvious where they went. There's another 10 million people, we don't know where they went, but there are a bunch of them here too. And they all need a place to live. It's either going to be a house or it's going to be an apartment building, right? So we got growing demand, migration. What does that do to prices? Pushes up. So we got things pushing down, we got things pushing up. So we have less buyers, yes, that is true, but we also have less sellers. When you have less supply and less demand, what happens to prices? Flattens out. So that's why the prices didn't crash. We also have another thing going on. How many of you know this? We're in the middle of a housing shortage. Who's heard that? Housing shortage? We have 6 million fewer houses. We're not building enough houses. And if you're not building enough houses, everybody's got to live somewhere, house, apartment building. If there's not enough houses, where are they going to go? Well, that just drives up the demand. With limited supply, that's another thing pushing prices up. So yeah, there's a lot of offsets. So what's driving the market? Supply and demand. Number one, economy. Economy is not bad. Now, economy doesn't directly affect real estate. You know, it's like, it doesn't directly affect it, but it indirectly affects it. People have jobs, are more likely to buy houses. And people have jobs. Unemployment is low, job growth is good, business growth is good, stock market's kind of neutral, consumer confidence is kind of neutral. So that's kind of overall a little positive, a little up and a little neutral. Housing affordability, interest rates, oh, there's a red, right? Higher interest rates, less affordability, that's pushing prices down. House price trajectory is flat. Interesting, it's flat. Housing supply, active listings flat, months of inventory neutral, right? Yellow's going sideways, green means up, red means down. Housing permits, we're not building enough permits. We're not building enough houses. You know, construction labor, we got another problem. Contractors, they're getting old and they're dying. The average general contractor is 58 years old and they're not getting replaced. So if you got a kid, like a teenager, here's some advice. Don't send them to college. Buy them a hammer. I'm serious. I know plumbers pulling down $1 million a year, guys. Plumbers are making $1 million a year. You go to college, get a stupid degree. I went to college. My parents went to college. Now I got a teenager. I don't really care if he goes to college. Gets some stupid degree, maybe he gets a job paying $65,000 a year, or we make him a real estate investor and makes $1 million a year. I mean, it's your choice. Or make him a plumber, he makes $1 million a year. I mean, not all plumbers are making $1 million, some are, right? So yeah, you know, buy him a hammer. Housing demand, closed sales trajectory flat, pending sales trajectory flat. Migration, this should be the supersized bullet on the page. This is the ratio of people moving in versus people moving out. People are moving to Texas. They need a place to live. So in other states where people are moving out, right, they're losing the demand. In Texas, where people are moving in, it's driving demand up. So that's what saves the market. All right, where's it going? I'll give you the forecast. And by the way, this is not my data. This is mostly from Texas A&M School of Real Estate and a bunch of online sources. We're not here to try to persuade you of anything. When the market's going up, we say the market's going up. When the market's going down, we say the market's going down. When it's going sideways, like now, we tell you it's going sideways. What do we expect to happen? Well, if you were expecting some big market bottom, that was probably it. There wasn't much. Interest rates will probably drop a little bit. That's what everybody thinks, but not much. A slight drop in interest rates will juice the market a little bit, but not much. When you look at everything going on, we don't expect much to go on. We expect the rest of the year is going to be basically flat. Maybe the prices will pick up 1% by the end of the year. So there's just nothing big that affects supply and demand. We're not going to get down to 3%. Again, that's not likely to happen. There's not a whole bunch of stuff that's likely to cause a huge influx either way, up or down.